posted in the wrong shit. Hold on. There we go. Thank you, Case. What's up, everybody? Let me go to this one here. Mike. No, this is it. Okay. How's everybody doing? Let me put this one too in here. Hold on. Okay. All right. Is there anything else? I think that's the main things, right? All right. Won't keep you guys too long on a Friday, but figured I'd touch base now that we got the correction we've craved. We want to keep tabs on things. Let me put, what else should I put in here? I got to repost all this stuff when it updates still. That's the problem. All right, I'll post that as we do it here. All right, so here's the story. Last week, when we spoke, again, I know members we talk on a daily basis, but for those of you who aren't on the last Thursday webinar, we spoke about how, a lot of the shorter term sentiment, more tactical sentiment signals, short term breath, that sort of thing was pretty much lined up for some sort of snapback rally, right? Probably be a decent rally when it shows because they're, again, on a short-term time frame, you had some a solid washout breath-wise, but keep in mind, right? They're short-term, more tactical signals, and on an intermediate-term basis, we still have some work to do. Again, to get to where we have an edge off the signals we're paying attention to, right? So sentiment, positioning, not every pullback, every correction has to get to a point where you get an extreme in positioning and sentiment. Obviously, there are a lot more shallow pullbacks and dips that you're not going to get it, right? You're only going to get short-term signals to line up green. But it's important to keep tabs on the time frames, right? They're important. A lot of people they screw that part up, and it ends up being extremely costly, right? Hence, if you do have an edge over the short term for a squeeze, it possibly you might want to look at something on an intraday basis, right? Like we spoke about, take a couple stabs at a few entries on an intraday basis, and if you happen to catch the move, risk reward wise, it's worth it. It depending on how you feel about the current market, right? Maybe it doesn't make sense to hold much overnight exposure off those signals. If you're more constructive on the market, maybe it does, right? So, and I'll give you an example of what I mean by that. There are quite a few people out there that really truly believe we are in a full-fledged start of a new bull market, okay? A lot of times you're not going to get those stronger big picture offside signals off pullbacks when you're in a bull market. Okay, they don't give those entries up. So if you have the conviction, right, based off whatever confirmation you may be using or looking at, if you have that conviction that we are in a true bull market, dips like this is something you want to be a little more aggressive. Obviously, if that's not your take, you want to take a little more of a conservative approach, right? So that's where time frame matters a lot. And again, everybody's got different things they look at for confirmation. You have to look at something. Eventually in this game, you have to believe in something, even if it comes down to levels or price action. If you're going to be in this game longer term, there's got to be something you're going to have confidence in. Okay, you can't just wing it every day, come in, see what the market looks like, and roll the dice, right? So depending on what signals you may have confidence in, we have different interpretations. Mine, as I share with you guys, again, Steamroom members on a daily basis, and you guys every week, the flow is one of my major confirmation signals, right? Throughout my experience, and this could be, again, something new, right? We discussed that, a market that none of us have ever seen. We don't see those characteristics that we would normally see at a true bottom or start of a bull market. Okay, very possible. But for me, I have the conviction that the flow and sweeper activity is going to get super aggressive in new names, and there's going to be new leadership that sweepers will discover for me, right? So I have confidence in waiting for that as my confirmation. Okay, if I'm not seeing that, doesn't mean I'm not going to try to take advantage of bullish moves and squeezes and multi-week rallies or whatever it may be. But I will not get aggressive position-wise unless I have those signals. All right, so again, just to make sense out of it all so you understand, because a lot of this, especially if you're new, can make you dizzy. But this particular dip, right, based off that we're just seeing tactical stuff light up green, and based off of a lack of new leadership being discovered from sweepers, it's something I looked already to take advantage of on an intraday basis, right? So that squeeze, there were actually a couple days of it that I played. I took a couple stabs at it on an intraday basis. And actually, two of the times were well worth it. I had to take a couple scratches prior to that because I was a little early and sweepers never showed up for the squeeze. But again, that's a moot point, whatever. So that's how I'm approaching it, right? And as I mentioned to you guys, starting a few weeks back, once we got through the heart of earnings season, I'm paying closer attention to the flow, every detail of the flow, to try to pick up on some early signs of what possibly they may be buying into this pullback. Because no matter what, right, even if this is not a new bull market and it's a range bound market, like we said, or whatever it is, okay, when these pullbacks come to an end, right, and it's going to come to an end even if we're not in a bull market, there's going to be a rally at some point over multiple days or multiple weeks, and there's going to be money, some decent money to be made, especially in individual names. There's going to be a lot of alpha in individual names, even if the market, rallies to a top of a downtrend or whatever it may be. When that turn comes, there will be individual names that significantly outperform. So even more so, even that I'm not seeing new leadership and the signs and characteristics of a new bull market out of the flow, I'm still looking and keeping close eye on the action and what they may be playing in names, even if it's just for whatever it may be, a range bound rally, bear market rally, whatever label you want to put on it, right? So again, not to jump around, but the action we spoke about, there hasn't been really much change in the action. We're seeing a lack of interest on the buy side of anything outside of really energy. As a matter of fact, they were quiet in energy, those energy names we were talking about for a bit. If you remember, we looked at a few of those names. They really ripped hard. They showed up today, right? MPC, more October buying today, right? So you see huge rip and kind of a little breather here. MPC caught some more repeat activity in the Octobers, right? And then another name they've been pouncing on is this PBF, which we constantly talk about. And some more buying there again today. Okay, another name that's been seeing flow constantly. Again, this is nothing new, but CCJ, uranium. Again, this is not, to me, this is not new bull market material, right? Even the energy names, they're very selective in, right? So they're just finding stuff that they see value in, right? They may feel it's undervalued, or sectors that have been ignored. They're finding a few names, but that's the extent of it, okay? Outside of that, all the names everybody's looking at, they're so crowded and littered with attention that there really isn't a huge edge in these names. You really have to see some impressive activity in the big guys like an Nvidia and Apple, because these names for, 2-3 months straight, we non-stop call buying, non-stop call buying. So what we're likely to see in these names is two-way action, two-sided action. Right? When they're moving higher, you're going to see call buying. When they're moving lower, you're going to see bulls that are buying puts and protecting. Okay, that outside of an intraday basis, there's not much edge off of that. And to be quite honest, even intraday, you really need some decent action. Today, out of all those names, right, Nvidia, Apple, Tesla was the only thing that saw any sort of action that you had an edge in momentum on an intraday basis. That's it, out of all those names, right? So there are going to be times where these things are tradable off the action, but as much as people don't want to hear it, especially if you're big fans of these names, there's not going to be an edge in these names until they go dead for a while, or they get hit even harder than they got hit. All right? These names have to go from, according to Hartnett, right, the most crowded trade to the most frustrated trade, right, where people start to lose interest. They talk about how they're getting chopped up and premium burn and blah, blah, blah. All right? And then once the action dies down there, then when you see aggressive activity pop up, it's actually going to stand out. It's going to look different. And then you got some sort of edge in these names again. Otherwise, again, you want me to be blunt? You got to treat them like you're playing in your DraftKings account. and just make sure you're managing your bankroll properly, right? If you can hit over 50% in those names right now, you're Fang Jesus. That's what it comes down to. All right? Because again, just think of it logically. There's so many. Look at it. You see the hype behind Nvidia? Did you see the hype? All right? And let's be honest. What happened yesterday? Maybe it's a little too obvious, being a bearish thing, but that's not a good sign. What happened yesterday, right? You see that when things are crowded. You don't see that when things are underowned, right? You see that type of action when they're crowded. That doesn't mean that they can't go higher for a period of time, right? Even if they're crowded, we've seen that already. But they're gonna more than likely they're gonna be tough trades. They're gonna be small windows where there'll be better times to trade them than others. But other than that, they're tough. So again, to beat the dead horse, right? Whether you like playing those names or not, I think for the health of the market, you want to see buying in other things. It's not going to last if they're just buying Nvidia or Apple, okay? It's not going to last if they're just buying a handful of energy names, right? If there's a risk appetite out there that's healthy, and we are in a bull market, they will find a lot of things to buy. A lot of things to buy. Right? They're not going to be extremely selective in the energy sector. So, moral of the story is, until we start to see signs of that, for me, there's no reason to try to front run or jump any turn in this market without positioning extremes and sentiment extremes. Right? So that's just to get an idea of, where I'm at and how I'm looking at things, right? I mean, think about this, right? You got Sharpies, which, again, my feeling is the smartest money on the street, right? They have been taking down their risk, right? They were aggressively long in the toughest of times when nobody wanted to be. It wasn't an easy trade. Fed was rigging the market. Impossible trade, right? But that's when they like to fire their gun. They've been taking down their long exposure here, okay? For me to take the other side of that trade, I would need sweepers to go ape shit and new underbelly leaders all over the yard. All right? That's the only thing I could possibly think of that would make me get aggressively long into Sharpies taking down exposure. So that's kind of where I'm at now, right? So again, that's the overall market. Now, that's not to say we can't find opportunities in single names, right? There'll be opportunities, but for me, I need to see the action there, right? And they're far and few. Like even like a BlackBerry, we saw, some unusual September buying, right? Just because of the lack of buying out there, this didn't make sense. Why are they buying BlackBerry Septembers? All right. They had something up their sleeve. That's kind of the things we want to look for at the least, and maybe find some opportunity on the long side to go against the trend that right now is against bulls, right? I mean, we had a nice time there. If you're bullish, some of us didn't take anywhere near the advantage of what we had. But very possible we're going into a little bit of a period here where things get a little turbulent, and we want to be prudent about it. Okay, so that's where I'm at. Right, I'm keeping two most important things. One, the sweeper activity. Whether I'm buying the names or not, I want to see new shit. Right, let them buy biotechs that I don't want to touch. I don't care. As long as they're buying aggressively new biotechs, right? Let them buy whatever it may be. Cathy names, whatever it may be. But they have to get aggressive for them to signal to me there's a risk appetite out there and we're in risk on mode. If not, we got to our goal, the playbook, is to find windows of entries on the long side where the risk reward is worth taking a shot. Okay? Here we just had one on, again, time frame wise on the extreme short term. Right? As we mentioned last Thursday. Well, I don't know where that is. I think we had Super Scion Blue last Thursday. Okay? But intraday, you see some sort of flow coming in, starting to build momentum in the price action, right? Or whatever levels you're looking at. Some of us like to look at the credit markets to tip us off, whatever it may be. Okay? Take some stabs on an intraday basis. Keep your stops in place. You got luck on your side, you may catch a big move. Okay? But the risk reward is worth taking a shot there. Okay? So here's where we stand now, because I know that's what most of you are most interested in right now. Even though we're right back generally to where we started here, we don't have the same signals we had into this Super Scion Blue, breath-wise, sentiment-wise, but we're close, right? We're close, where one day of weakness, we probably get there. That's on a short-term basis, okay? Positioning-wise, here's what we look at. Here's what we look like. Hold on. Sharpies for the week stood pat. They didn't do a thing. Okay? And what's a little interesting about it is, again, I'm going to check the updates after this to confirm, but it looked like hedge funds added a little bit of short exposure back on. Okay? So if you remember, Sharpies, what they've been doing is basically booking that hedge fund bet, right? They've been taking the other side. They got aggressively short. Sharpies got aggressively long. So what's a little interesting here is that hedge funds added a little short exposure on, and Sharpies didn't add back any long exposure. Okay? I don't want to make a bigger deal out of that than it is, but it's something to take away, if anything, from this week's update. Okay? So this is where we're at. Again, for anybody who's new, here's that aggressive short covering, adding long exposure into the summer lows, right? They took a little bit of it off. They didn't add back into the October lows. Okay, one of the reasons probably on top of sweeper activity why I wasn't sold that these October lows were the start of a bull market. You guys remember the conversation we had. We felt those October lows would hold, okay? But we would likely stay range bound. You remember the conversation, okay? Where it changed, SIVB, okay? We had regional bank failures. You had a little mini panic. Money rushed into money market funds, okay? You had the Fed, Treasury capitulate. They had to create a facility to bail out the regional banks, okay? That stopped the liquidity drain right in its tracks. You had hedge funds get aggressively short, riffraff aggressively short, and Sharpies stepped on the gas. Right? So like we said, this was more of a pivotal low and a start of a rally than the October low was because of what was behind it. Right? You even had, like if you remember where we've been talking about capitulation. It's almost always capitulation. That's the final chapter. You had a form, it was just so short term, of capitulation into that regional bank low. Okay, so you had a lot of good behind that low. But anyway, you see how they aggressively added exposure. Look what they've done recently now. Okay, this is just recent, literally into the highs, and as the market's been coming in, they washed out that whole aggressive ed and then some. Okay, so this is, people who follow Sharpies as much as I do, this is what's got people a little concerned here, right? They still are slightly long, so they're not aggressively hedged as they were back into the highs of 2022, the start of 2022, right? But on a short-term basis, This is pretty aggressive, them taking down exposure. For whatever reason, we don't know. Unless you know these guys personally, we don't know why. More than likely, it's because a lot of that bearish positioning has been unwound, right? You had that huge hedge fund short position, and the bulk of it has been covered. So now that safety net's gone. Okay, but on a week-to-week basis, they didn't do a thing. Okay, here's the Sharpies versus hedge funds positioning in just S&P 500 futures. This is not everything, just the S&P. Okay, Sharpies in the red, hedge funds in the green. Okay, you see how short they got into the SIVB lows, right? Hedge funds. They were looking for a replay of 2008 off of that. Sharpies took the other side. And now, as hedge funds have been covering pretty much that whole short exposure, they've been doing the opposite. Okay? So that's what's against us here. Now, I honestly would feel better. I wouldn't even be talking about it, honestly, if the market was rallying and this was going on. This would be totally normal. Because you got to understand, Sharpies, that's what they do. They hedge. Okay? The reason why it's a major signal when they take off their hedges is because it's unusual. Their goal is to be hedged. Okay? So when a market rallies, right, kind of like the COVID lows, right? As a market rallies, they put on hedges, and even when the market continues to rally, they'll remain hedged up until they get that opportunity again where everybody's on one side of the boat. Okay? So my point is, there wouldn't be much takeaway if the market was continuing higher and Sharpies were taking down exposure. That's normal behavior. Okay? But they love to buy weakness, right? Because weakness brings fear and it shakes everybody out, right? That's that's the makeup of a bottom. That's what makes lows, okay? And what's going on here is that we've been selling off, the market's pulling in, and they aren't adding exposure back on in any way. They're still taking down exposure. Okay? So that's the little different wrinkle here. Don't hedge funds see this chart? Yeah, but here's the thing. What does a hedge fund see the chart? It's like, does Riff Raff see the chart? You gotta understand, hedge funds, you got some of the most brilliant minds on the face of the earth, right? That run hedge funds. From, Drunkenmiller, Tepper, Ackman. It's not to say that they're a contrarian play individually. It's when they all agree, just like anything else in this market. When everybody's on one side of the trade, it never pans out. Or very rarely, if ever, pans out. That's just the way it is. When riffraff, I don't know if you guys know the term, but we call riffraff like retail traders. Don't they see the sentiment readings and all the positioning measures when they're all in chasing AMC as it goes parabolic? All right, they still do it. You gotta understand, this game, that's why they tell, especially people like us, right? If you can't look yourself in the mirror early on in this game and admit you don't know shit and it doesn't matter what you know anyway to make money in this game, you're dead. You're dead. Because no matter how much you know, right? No matter how intelligent or market savvy you may be, there's always players out there that are smarter and have access to more information than you do. Right? And you will learn in this game as time goes on, right? Things that don't make sense end up being your best trades. Or, if you're on the other side of it, what hurt you the most. Right? Everybody's looking for a recession. Where's the recession? right? The most anticipated recession ever. Where is it? All right? How it works like that every time, I have no idea. But that's just the way the game works. You know? It's just the way the game works. And, it makes sense with supply demand when you look at it that way, right? Because if everybody's already bearish, everybody's already short, everybody already sold, who's left to sell? Right? I mean, when you break it down that simple, it makes sense. On the flip side, if everybody's long, right, no matter how bullish news may be or an environment may be, who's left to buy? Right? You only have sellers left. So this game will make you, until you figure that part out and understand that, this game will drive you nuts. Drive you nuts. Okay? Because as soon as you think you might have something figured out, they'll chop your head off in this game. And look around you. Again, I'm Drunken Miller, anybody out there, Tepper, these guys, you can't, no matter how much work, study, no matter how much time you put into this game, you'll never get to that level. And these guys are often wrong. They're wrong often. Marko Kolanovic, the guy's brilliant. He's like a rocket scientist or some shit. He was dead wrong in this bear market. You know what I mean? Doesn't mean shit. Right? Doesn't mean shit. Where these guys offer value is when they're against the crowd. That's what it is. Mike Wilson. When he was against the crowd being bearish, he looked like a genius. When everybody agreed with him and started following him and was bearish with him, what happened? Right? It's the way it goes. So to answer your question, yes, I'm sure they are aware of this individually, but this is a tally as a group. It's a tally as a group. So, it's like what comes first, the chicken or the egg thing? Is that what eventually got them to cover? Right? There were a lot of quote-unquote smart minds, smart money hedge fund managers who were short ahead of that banking crisis, and they got aggressive when SIVB went down. Okay? Because they felt like they were right. That's something that a lot of people try to teach in this game too. Add to winning positions, right? That's a crock of shit. All that shit's easier said than done. They added to what looked like a winning position, and then they got drilled. So they had it figured out. Okay? What they didn't have figured out was that the Fed and the Treasury were actually going to do something about it. All right? They thought, according to the Fed was going to let things take a beating because they had to battle inflation. And the total opposite happened. All right? They were banking on leading to credit tightening and a recession. That never showed up. So whatever it is, they have now covered as a whole. Well, I'm sure you still have hedge fund managers who are short out there. Okay? But as a whole, as a group, they've covered that whole aggressive edge on the short position. Okay, so that's where we stand right now, right? That's why, again, as it's dorky or not, because I'm passionate and I enjoy this shit, we're at a pivotal point in this market, a big spot, since, in my opinion, since at least SIVB, right? And prior to that, the October lows. Because you had positioning build up, and then we started to see the unwind of it, right? And that unwind is taking place. Now, how it all shakes out is going to be fascinating to watch. But it takes time, right? It takes time. And it may take a lot longer than all of us would like, right? It doesn't go from one extreme to another just like that, no matter what the market does. Okay, so what we want to see, right, out of this stuff, for it to line up bullish again, okay, ideally we want to see the market either hang around here or trade lower off some negative news, preferably. That would be even better, okay? And what you want to see is you want to see these guys add back that exposure. Right? That's what we want to see. So that's when we had this conversation a month back now, when I told you we needed to get that gut check before we can get any intelligence from our signals. All right. In other words, if the market just continued to grind higher, right, or chop around, we weren't going to get any information from any of these signals. They were useless. They weren't going to tell us anything. Like I said, even if Sharpies took down their exposure into strength, it wasn't going to tell us anything. Okay? We needed to see that gut check off that rally, and we got it. And now what we're starting to see the pieces fall, and we're going to see how they line up when they get set up. All right? So that's where we're at now. And while we wait for that, I think it's the best time to keep an eye, again, for those of us who follow flow, on what sweepers are accumulating positions in. Okay? Not are they buying weeklies or front month Apple calls playing for a bounce. Okay? And you got to understand the weeklies too, right? You think all these weekly call buyers are holding these weeklies up until expiration, 4 o'clock? You know, the majority of these people are flipping that same day. So you can't take, no matter what size we see or how aggressive the action may be, you can't extrapolate that information into anything beyond momentum over the short term. Right? Because we have no idea how they're playing it. Okay? So we want to see some position building in new names, right? And the keyword's commitment, right? Not one day. You want to see them keep coming back. The stock's down, even better. They're adding. Market's chopping around, they add, even better. Right? And they keep showing up. That's usually the first sign of a healthy bull market, right? It's almost you're seeing in real time, you're seeing a bid come into the market. Even if the market hasn't bottomed yet or started to rally, that's the beauty of flow. We have access to that information in real time. There's no other source that shows you that, right? You look at what? Blocks in equities, you don't know who's buying, who's selling, right? If you read flow properly, you can get an idea of whether risk appetite's building or not in real time. All right, so that's what we're looking for and keeping an eye out for in the meantime, while some of these positioning and sentiment signals unravel here, right? And again, we don't want to jump the gun, but eventually we want, if we get offside sentiment and positioning before we get flow, right? Before we get aggressive confirmation from the flow, that's where you can decide whether you want to front run the sweeper buying or not. Now you can't, in my opinion. You can't. I mean, you could get lucky and make money, but off this information, you can't. Right? Why? Because if that buying doesn't show up now and you're front running buying coming in, positioning is not set up where your downside is limited in a sense, right? You still got the capability for downside here. Right? Sellers are nowhere near done if they need to sell. So that's the problem, right? If you get confirmation from the flow, that's a signal telling us that positioning is not going to get to that offsides, and there are at least going to be some sort of tactical rally beforehand. Right? So that's the gist of it. This is also interesting, right? Because what we just discussed, that's the futures market, right? For those of you who follow the indexes, and I know most of you trade solely off that. What this is showing, oh, wrong one. What this is showing is hedge fund positioning in single names, right? We're paying attention to the flow in single stocks. This is showing us the hedge fund equity exposure in single stocks, not indexes or futures. Okay? And what was bearish about this, the market, the first little pullback in the market that we got, they added exposure to single names. That's not a good sign. They bought that, basically they bought this dip. Right here, bink. Okay? Why is that a problem? Because if they get caught, right, that we got to face the brunt of that selling. Right? And I remember I told you guys the example, it's rare that they do that. But I gave you guys the example of late 2018 where they did something similar to that. You know, the market, they bought the first dip, the market chopped around for a little bit, and then the market rolled over into the illiquid holiday time. They weren't even at the desk. So all of a sudden the market starts selling off aggressively. They have to sell into an illiquid market. And you guys know how late 2018 turned out. Felt like the market was crashing because of the liquidity then. All right, so there's not that big of a track record I could base this on because this is a rare thing for them to do that. Right? Usually they chase rallies and they short weakness, just like everybody else. Okay? So they thought this dip was going to be short-lived. They got long, and then you could see here, they finally started to spit up some of that long exposure. All right? So that takes away some of the fear from that bearish scenario I was telling you about. Now, how this can play out bearish is if they decide to get aggressively short from here, right? If this selling continues, that likely will have an impact on the market, right? Hedge funds move a lot of money, okay? Ultimately, it may set up a great entry, but while that's happening, at the least, the market's going to feel heavy if they decide to do that. So that's what we're keeping an eye out here. But our biggest fear is has subsided here. Reason being is if they continue to add into this dip, we were dead. We were dead. You know what I mean? We were dead. So our biggest fear out of this is gone for now. Anybody have any questions on this stuff here before we jump into quickly the other things? All right? So again, we're keeping an eye right. And you know, I saw somebody else just mention like CTAs and the systematic funds. We didn't even talk about them today yet, right? But again, they all were in the same pile, okay? And that's what we're waiting for. We're waiting for this to play out and to see how it unravels. That's what we're waiting on, right? That's what we don't want to jump in the middle of. Okay, that's what we don't want to jump in the middle of yet. Yeah, unless we see, and it depends. Like for me, like I need to see sweepers go bonkers building positions, you know, for me to get in the middle of this. But again, you know, a lot of you Steamroom members, right? You know, you guys put me in the conservative camp at this point in my career, you know. But for me to get in the middle of these things playing out, you know, it's going to take a lot of convincing. It's going to take a lot of convincing. All right? But in the meantime, that's what I'm going to keep an eye on names, because I think that's where at least you'll, twofold. You can find opportunity there, even if the market is a bit turbulent, right? If there's flow, right? You can find opportunities there, outperformance there. There could be sectors that do a lot better than, let's say, tech in the overall market. We've seen that before, right? Staples, energy, they can march to the beat of their own drum while the markets look like shit. So that's why you want to pay attention to individual names here. It's worth paying attention to, even if the overall setup is not ideal. All right? So that's where we're at, big picture wise. Some of our big picture signals, as far as like out of the credit markets, not showing any signs of concern. And I'll show you what I mean by that. Right? So, in other words, the market, the selling that we're seeing right now, and some of you may not think it's important to acknowledge it, but I sure do. The selling that we're seeing now, according to what we look at in the credit markets, and this is one of them, they're indicating to us that this is nothing more than a sell-off based off positioning and sentiment. Okay? There's no cracks in the credit market that are hidden, right? We hear rumors of that every day. Oh, the bond market or this or that blowing up, or China's ready to default or anything like that, right? Not to say that can't happen, but right now to this point, the credit markets aren't indicating to us that there's something catastrophic in the works. Okay? But again, it's not a forecasting tool. It's a real-time gauge on what's happening right now, right? So for now, there's nothing like that. But if we see these things start to flash red, then obviously we got to act accordingly, okay? But this is what's been going on here, right? These are the credit default swaps. They're doing nothing. Okay? They're doing nothing. Totally normal. You get a little weakness, right? They widen out a little bit, okay? This right here, that's screaming, get out the effing way. Don't even think about building long positions, right? That's what this is telling us. That's an aggressive move, okay? The market's got no shot of going higher into that, right? But this, you could chop around all day long, right? And even if the indexes aren't going higher, while they're chopping around, like I just said, and very easily we could go into that type of market where the market is trading in a range, but certain sectors feel like they're in bull markets, right? Just like tech felt like it was in a bull market this year, up until recently. Prior to that, energy felt like it was in a bull market for a good 6 to 9 months, right? Industrials felt like they were in a bull market from the October lows up until January, February. But they're rotating bull markets. You understand? That's the difference. Buying and holding, right, and marrying the same names, if that's the type of market you're in, it's not beneficial. You know? So as of right now, and that's the other thing, right? Remember we spoke about, and I don't want to put too much on the plate on just the one webinar, but if we were in a new bull market, right, that invisible Fed put we were talking about, if that was at play, these will roll over. This will roll over, right? Because if the Fed is backstopping, credit default swaps tighten up continuously. And you will see these things just continue to grind lower, right? So if they make new lows, those of you who think this is a bull market, no matter how you want to label it or what characteristics you want to look at, it would be signaling that the Fed is on your side. Plain and simple. Okay? But as of right now, we just, since here, no coincidence. Here are the October lows. Okay? That high has never even been tested. Okay? So again, we start to see this happening, right? You start to see this starting to rip up and over 500 to mid fives. You gotta move it on this, push aside, and let things shake out as they may, right? Because you don't know where this goes depending on what breaks. That's what it's telling you, right? The Fed is gonna break something, okay? The Fed was rigging the risk assets to the downside to battle inflation. This is what they were doing, right? And the other thing that you guys probably see, I have it over here, that you see more of the swaps, right? More common, especially these days, are financial conditions, right? And they look similar. So this is what the Fed feels they can control to either add liquidity into the market or tighten liquidity, right? Fuel risk appetite or decrease it, right? Financial conditions. So here, okay, financial conditions get tighter. That's not good for equities or any risk assets, right? Automatic. Money comes out of equities, goes into safe havens, right? We saw that. Here's what we were seeing and living through throughout 2022. Financial conditions were getting aggressively tighter. October lows stopped like a clock, and they look almost identical to swaps, right? It's almost the exact picture of swaps. Okay? And here's where we're at. And that's, that's what a lot of people are claiming. Like, listen, the Fed can say all they want. Oh yeah, we have to stick to, we're gonna battle inflation, blah 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 blah. They're not tightening financial conditions. From their rhetoric, even right after October, you would think that this thing was screaming higher to the tighter side, and it wasn't. And so again, it's important to pay attention to what they do, not what they say. The Fed. Okay, so same thing. If there's an invisible Fed put at play, right? The Fed, for whatever reason, guys, it's above my pay grade, and I'm sure it's above a lot of yours too, whether you want to admit it or not. Right? When QE was born, nobody around me knew what the hell QE was and the outcome and what effect it would have. Nobody had a clue. Okay? Everybody thought QE was a bad thing when we found out about it. Okay? What's to say we don't find out about some new facility or facilities they create as things break in the economy? Right? The new form of QE. But again, that's irrelevant to us, right? We don't want to try to figure that out. This is how we figure that out. Okay? If financial conditions continue to loosen, whatever we think is irrelevant. The Fed, whatever they're doing, is loosening financial conditions. And that's good for risk assets. So even with like SIVB going under, I'm still amazed how credit tightened. I'm sure banks don't want to lend money out right after SIVB went under. I'm amazed how financial conditions didn't tighten off of that. Well, the Fed also and the Treasury did something about it. I don't know what the hell that concoction was, that facility that bailed out the regional banks. I don't know what kind of impact it would have. I have no idea. But whatever they did, solved the problem for now until something else breaks. Why did I say that? Because where was SIVB? Here. This was SIVB, right? Right here. So basically, hedge funds were shorting S&P 500 thinking 2008 we were going to see a replay of 2008 in the regional banking sector, right? And financial conditions in swaps didn't go lower than when SIVB went under. Didn't get worse. You understand what I'm saying? Here. Stop like a clock. All right? So instead of things getting worse, things were improving. Even though the news and the noise around us was worse. Credit Suisse is going under. Oh no, this bank is going under. Oh no, Mike Berry's shorting all the regional banks. Get the bunker ready. We don't know what the hell's going on. Right? But this basically, even the price action in equities was impressive, let's be honest. But this was signaling to us that credit markets aren't concerned about any bank run or anything like that. So again, that's the value of this stuff. It's not predictive. It doesn't forecast. It's not going to forecast limit a catastrophe like 2008, right? But if something's in the works as it's happening, think about it. That's how we'll be aware of it. That's how we'll be aware of it. All right. So okay, big picture is telling us that this correction is just a correction. Okay, that it's important to know that in these times when the Fed just went through the most aggressive hiking cycle ever imagined. That's valuable information to know, right? So this pullback is just a normal pullback of sentiment positioning. We're waiting for sentiment positioning to unwind until we start to see some bullish signals. In the meantime, what do we do about it? We start building watch lists off flow and individual names. Maybe maybe they even get aggressive enough to where you want to play names while we're waiting for this. If you're impressed by the flow, you should. All right? Because we already said you can find alpha in names even if the market is not risk on. And I think Max hit the nail on the head. You want to stay tactical, but the important thing about tactical is you want to try to take advantage of specific windows, right? When things line up to be tactical, right? So in other words, you can't say, oh, I'm tactical, and then you chase the highs off the NVIDIA earnings, right? Because you're going to get destroyed. All right? So what you want is you want to see weakness. You want to see some of that short-term sentiment stuff we look at favorable, at the least, if not on bullish signal, on the right side of the field. All right? And stay away from chasing or putting on any tactical exposure when things get a little too heated. Okay? And, it's going to come off weakness. But our saving grace, as it has been, will be if we see action in individual names. Again, post-SIVB is the outlier of this whole shebang since the October lows. All right? That's when things went bonkers. AI caught fire. This guy went nuts. We saw speculative names all of a sudden light up. Right? Out of nowhere. I mean, was it coincidence when the Fed or the Treasury took action? Right? You saw a bump up in liquidity and all that happened. All right? So now that's kind of all fizzled out. Right? So now, unless the Fed or Treasury's got to treat something else, very possible we go into this climate again. And that's not this climate, okay? That's not 2022, but October up until SIVB, this climate. Until we get to an offsides positioning, right? Offsides enough to where can put a decent low in. Yeah, and that's the good thing. Who was I talking to? I can't remember, but it might have been somebody in the room. But the good thing, if we are going into this environment again, those of you who like to play both sides can play both sides again. Right? You couldn't play both sides into this. Rip. All right? So if we do go back into this environment again, and again, I'm not talking about just the overall indexes, because you're going to have stuff that looks like it's in a bull market, and at the same time, the total opposite, stuff that looks like it's in a bear market. All right? So kind of what Matt said. You get upside exhaustion on some of the stuff that's out of favor. You probably want to look for downside plays there, right? And the stuff that is in favor at that period of time, you want to look to buy dips in. All right? So it's a more quote-unquote trading environment as opposed to what we saw here. But here's the key, okay? And this, for me too, God's honest truth. The bias is the killer, right? When you expect something or you want to see something, right? You think you can will it to come true. That That's the worst thing you can do right now. It's, I mean, the ideal approach, right? The best way for me to explain it, how I want to act and react to this, sit back and almost let things fall in my lap, right? Let the sweepers do the talking. Let Sharpies do their thing, right? Let them scream at me what I need to be looking at and what I need to do. Rather than me taking the initiative and trying to front run what they may do. Does that make sense? You guys understand what I'm saying? And again, in bull markets, you want to get aggressive where you want to try to front run where sweepers may go, right? Or front run before bullish sentiment signals flash green if you want to start buying early, right? That's in a bull market, you want to do that. But for me, because I'm not seeing the ingredients of a true bull market, right? My ideal approach right now, I want to sit and I want things to come to me. All right, so in other words, I'm calm, watching the flow as close as I would be in a bull market or any other market, right? But I'm not just going to jump once I see some buying in XYZ, right? What's going to get me to be interested in XYZ, I'll see some buying today in XYZ. I won't do anything about it. 2 days later, they'll buy XYZ again, all right? Now they got my attention. 2 days later, 3 days later, they're adding again into XYZ. You understand? And then it gets me to the point where, oh man, what's going on here? Yeah, so it's a more laid back approach while we wait for all this stuff to shake out. And in this way, like I said, if sweepers are going to get my attention on a few names, right, while we're waiting for this stuff to line up, listen, if they did enough to get my attention, I'll take a shot. You know what I mean? I'll take a shot. It's worth taking a shot. Right? If somebody's aggressively building a position in a certain name, even if the market is not at an ideal entry point, right, it gives me the confidence to at least maybe start buying some of that name. Yeah, again, ideally, Ani, you're right. It makes sense at all times. You're 100% right. But I'm being honest with you guys. I'm not that disciplined in a bull market. I'm being dead straight with you guys, right? He's right. You're probably better off being that disciplined, no matter what. But in a bull market, I get a little sloppy, but I got a better shot at getting away with it when I get sloppy. You understand? That's the difference. That's the difference. Yeah, and see, like, Praveen's talking a couple names, right? It's just a handful of names that we've been seeing action where you'll take notice. And, those are a couple names Praveen just rattled off that of recent weeks it would have caught your attention. Right? Again, it's obvious. It's obvious. You're not questioning whether they're buying those names or not, and same thing, you like, right? I know, like, there's a good handful of us who aren't crazy about energy names, right? So no matter how good the action may look in energy, may not get us to buy it. But it's irrelevant, right? It's irrelevant. The healthier the market looks, the more action we will see. Plain and simple. The more names we're talking about, right, the healthier the risk appetite is. That's what it comes down to. Yeah, Praveen's 100% right. And he watches the flow just as closely as anybody, but he's 100% right. We need the buying to spill over, right? We needed to find stuff. If you remember last earnings season, that's what we were looking for, right? They were buying those big mega cap techs and the AI names, okay? And I remember, like it was yesterday, we were on the webinar, we said, listen, okay, this could last for a little bit, but it's not going to last long. They need to start buying something. Underbelly tech, underbelly growth, banks, something. They need to get aggressive in other stuff. Otherwise, we'll probably go into a market correction. Okay, what happened? They started to get excited in all these underbelly names, if you remember, all these growth names, all everything, right? They bought transportation names. It spilled over into plenty of stuff. So that was a good sign last earnings season coming out. This earnings season, it was a little different because if you remember, we had the discussion. We had a strong rally going into this in almost everything. Transportation names, industrial, the whole market was strong. So chances are we would need a breather before buyers would show up, and we got the breather. So that's good. All right? That's good. I'm telling you, it could be a lot worse, as much as you bulls don't think it would be. If we didn't get this gut check here, even if it ends right here, it's already has been constructive compared to if it didn't. If this rally would have continued from here, okay, the further that rally went, the more risk that comes into the equation. All right? Think about what was going on here. You had CTAs, VIX control funds, all these systematic funds, they were already fully loaded. Okay? They were loaded to the gills. You had everybody start to participate. Everybody. So if the rally continued higher, right, you're always waiting for that flush. Right? And the more the buildup, the harsher that correction is going to be. ISRG. You see that action yesterday? That's exactly what I'm talking about, right? So you get some action there, ISRG. Now, granted, it had a good day today, and that's what probably Max was talking about, right? What I'm saying is, ideally, what I would want to see, I want to see them build a position in ISRG here. Okay? I want to see, let's say the market's down early next week, okay? And they add ISRG, right? They keep adding to even different strikes, different lines, because, this is ideal. This is not a name, crowded tech name, off a nice dip. We all know this thing is a monster when it wants to move, right? I mean, this is ideal spot to see accumulation. And the beauty of it is, it doesn't see action. That's why we're talking about it, right? Caught some action yesterday, sticks out like a sore thumb. Sticks out like a sore thumb. So this is the type of stuff that we want to see, right? When I say new names, it doesn't have to be new IPO names or $2 stocks or stuff like that. It can't be all the stuff that got littered with buying in this last rally. It can't be. It's got to be new names like this. They filled the gap on that ISRG here. Yeah, this is a good looking stock. This thing is a beast too. Look at this thing. Jesus Christ Almighty. Yeah, I definitely have my eyes on this name here. Definitely. Yeah, this is no bullshit Kathy name. This is legit. This thing's a monster. So again, one day of buying was a nice trade. And that's where, again, depending on what type of player, what you're looking to do, right? If hypothetically we get bullish tactical sentiment signals, and you see a name like ISRG catch action, you'd rather play that, thinking you get a bounce there, right? Whatever. You see a level, like Ranchero saying, fill the gap, the technicals look good. You could play that, right? But the one thing you got to keep in mind is, if the turbulence continues in this market, if positioning is going to unwind further, okay, what you're going to see is you're going to see rally, and then you're going to see it come back down again, right? Maybe finds buying again, you're going to see rally, and it's going to come back down again. All right? So you got, if you're looking longer term or for more upside, you might have to deal with that stuff. Yeah. Exactly, right? That's like today it was up. That's what I said this morning. It was up like $11. That it sneezes and this thing's up 11. You said something about no. So many people took that serious. I was joking, Alon. I was joking about Luckin Coffee. But you know what's funny? I posted that. By the way, for those of you who don't know what I'm talking about, I posted on my Twitter. Nvidia is cooking the books. They're the next Luckin Coffee. You heard it here first, as a joke. So yeah. So I didn't, I didn't check the responses until like later on that night. I go back, I look, like people were taking me serious. I'm like, no, you nut jobs, I'm cracking jokes. Luckin Coffee, we talk about it all the time. But over the last few days, people are sending me like conspiracy shit on Nvidia that they're really cooking the books. They dug up dirt. These nut jobs. Yeah, but I saw some of that, right? Something with BlackRock, insiders are selling, and then they're buying back stock in the open. I saw all sorts of shit they were. Yeah. You guys, I put it on Twitter, forget it. They start digging quick. It's good to know. But yeah, I was cracking jokes, Luckin Coffee, because Luckin Coffee, we knew a couple of people who owned Luckin Coffee calls when that happened. And that spooked me out of a nice China trade in Billy that time. I like to kill that Luckin Coffee. Can you imagine? But yeah, this is not my speed. This stuff here, this is out of my hands now. This stuff. This is even tough to trade right now. Well, you had earnings. You need things to cool down. But today, for those of you who like trade this name, Tesla had some decent action today. Again, maybe it follows through into Monday. Very possible. But it was definitely the outlier of the big guys today, Tesla. I wouldn't put it into the swing caliber, like I would have threw it on the top bet list if I did. It wasn't that clean of action, but definitely worthy enough for intraday if you guys were looking at it there. And you gotta understand, those of you who are Steamroom members, right? Intraday, you don't need the flow or the player placing that bet to be right? Again, intraday, you're looking for just momentum. You're looking for it to just create momentum. That's it. You don't even know if these guys are going to hold those calls beyond that day. So when you see action come in rapid fire, right, you almost see it on a chart, right? You could see the momentum building. And, again, Tesla, it's not like you have to chase a rally here, right? It's down with the rest of them, been chopping around. If you like an intraday, it might be worth getting in the middle of this momentum. But the point I'm making is, again, for Steamroom members, you got to be careful with, like, if you see one or two sweeps. You see me talk about it a lot. I call it isolated action, right? You see isolated orders every hour or every two. You can't. That offers nothing in these names right now. Nothing. Tesla, they were hitting weeklies, Septembers, Octobers, and Jans. And honestly, I don't know, dead honestly, I don't know, Praveen, how much of it's clean or rolls or anything. No idea. If any of them I thought was clean, I would put on the top bet list. You guys see me put Tesla on the top bet list. But I couldn't tell. There was just so much going on there. I couldn't tell. And the other thing too, a lot of the October, Jan stuff, there was like out of the money calls. Like when they buy Tesla, it's usually you'll see like opening activity. They like to open new lines, and it's pretty much close to the money. But if I feel, even if I play it or not, if Tesla catches a real sweep, I'll always put it on the top bet list if I think it's legit. Oh, by the way, this guy. So here's the scoop on this guy. really interesting because this name now, we went from, yeah, I'll be honest with you, I wasn't too familiar with the name until Sweeper started playing it. And then, catches action every couple weeks, every month off a dip. Now this thing is like, each and every day that goes by, it gets more and more active. So this dip, they bought November's, right? Somebody swept up November's. Decent looking sweep. I think we looked at it, might have been a week or two ago on this webinar, right? Then they played some weeklies. Ranchero, you played the weeklies, remember? Over here. So they hit November calls, then they hit weeklies, okay? Weekly calls. This squeeze happened. Into the strength, right before the NVIDIA numbers, literally, they swept puts, right? Were those weeklies too? I don't know if those were weeklies. But anyway, they swept short-term puts into the strength right before NVIDIA. They caught this pullback, okay? And now today, right before the bell, they swept 2025 leaps. Look at this order. And a good-looking order, too. Where the hell is it? 2025 leaps, right here. Oops. Oh, I have it on the top bet list. What an idiot I am. Hold on. So I know a lot of you like this name. Who doesn't, right? I'm not even the stock performance, the numbers and everything else. But are interested in maybe finding an entry to start buying some longer term stuff. Hold on. All right, so it's on the bottom there. Can you guys see that? Jan 2025 270s. Look at the wood there. Ranchero, look at that. Look at that premium there. $80 takes out whatever offers are there across a couple exchanges. 1.6 million. Look at that. Right before the bell. You know, it'd be funny if this thing catches news or gets bought out. I swear to God, I'm going to track this guy down and choke him. I'm telling you right now. This guy catches news and disguised it with leaps. I'm going to track him down. I'm going to bring the SEC to his doorstep. I'm telling you. They're notoriously known for doing that too. But yeah, this is not too shabby, this bet. You know, this is a real bet. This is just a real bet right here. Literally 30 seconds before the bell. I didn't have time to just put it out there in time. Look at that. Damn. That's strange, right? And I'm telling you, leaps, you're probably saying, yeah, well, they're leaps. I caught one that looked really sneaky. It was a biotech name. You guys probably heard of it. I think Icon was in it. Forest Labs? Forest Labs. You remember Forest Labs? Was it Forest Labs? Anyway, there was a biotech name, okay? I'm sitting there, it's on a Friday, and literally, probably, I would say 10 minutes, between 5 and 10 minutes before the bell, I start seeing sweeper activity coming in, right? One missile leaps. I'm like, wow, that's a nice bet for that name. Doesn't catch action like that, right? Before I could even get those words out of my mouth, another one. So now I'm like, oh shit, what's this guy doing? Right before the bell, he's building leaps. Then another one. literally like they were weeklies, somebody sweeping up leaps. So I said, you know what? I'm taking a shot. I'm taking a shot. And I didn't play the leaps. I played front month, nothing huge, but just because I thought they were fishy. And lo and behold, Monday morning, boop, bought out. Crazy. That's the only one I caught, but like that. But I've seen a couple of them. So yeah, this is interesting here. But here's the top action on the day today, and 3/4 of the day was awful action. Awful. There was just no buyers to be found anywhere. It was awful. Then in the afternoon, things started to pick up a little bit. But here's the repeat activity in the energy names. They keep chewing on here. MPC. Look. This is somebody building real position in this thing. Same thing here. PBF. They bought all sorts of lines. I don't even know what they own anymore in PBF. Look, 500,000 sweep, 500,000 sweep. And this was the only other decent bet. That looked like a real bet. That's a gold miner. Nothing huge. December's. Everything else, okay, there was some decent size out there, but you had rolling activity. You had a bunch of, today was Friday expiration. It was a little messy, especially early on. But this is what I mean, right? Whether you play these names or not, you want to see this list continue to expand, right? With more and more names, even preferably different sectors. And that's a great gauge on risk appetite out there. Yesterday was awful, flow-wise. Today, up until the afternoon, was awful. You got kind of like a buyer strike going on, for good reason though. Tech got a little crazy, so digestion's good. But yeah, these are the top bets today. But yeah, I almost forgot. I wanted to talk about this SMCI. Yeah, BBIO, again, that's technically repeat activity, Praveen, like you mentioned, but you have a dip there if you like it, right? You have some breather. So I'm sure you know the story, right? A lot of people caught this one, you Steamroom members. I don't know, you probably caught it too. There was risk reversals. So in simple English, so I don't lose some of you, they were selling puts, taking those proceeds to finance calls. So pretty bullish. Over here into this consolidation. And then it caught news, right? Some big news, had this gap. And then we haven't really seen much action. Just a little rolling here and there. Nothing noteworthy. And then just recently now, we started to see some deep in the money buying, right? What month was it, Praveen? September? No, further out. What month was it? But some nice action again, picking up here a little bit. So you got some digestion here, huh? Better than chasing over here, I guess. Oh, November. 35.50 call spreads. Jesus Christ. Yeah, they had, I think they played call spreads, and yesterday, there was a deep in the money sweep, I think. Was it yesterday? I can't keep track of the dates. I think it was yesterday. But anyway, yeah. So that's the name. Again, technically repeat buying. What are the names? Here, this guy is seeing some action, right? So this is what I would put new leader category, but what is the symbol? VRT? No. Yeah, right? Yeah, VRT. So this name's been seeing some half-decent action. VRT. Look at this thing. Yep. This one, I know you guys had mentioned it to me. This they're buying December deep in the money calls and insider buying here, AAOI. I know a few of you were asking about that name. They're losing money though, right? I think they're losing money. And Jan 20s and Jan 20s. Yeah, they're losing money, AAOI. I remember this stock. This stock was the hottest thing on the face of the earth. I made a score in this thing, and then it got killed. Here. Oh, I think I told you guys. Right here, look. Whoop. So now, apparently it's hot again. And insiders are buying up here? Well, I say up here, you know. All you gotta do is scroll back. It's not really up there. But yeah, you got some insider buying there too. There have been a few names. Biotech. How about this one? This one caught a little action on the top bet list. SRPT. Look. Nice little move. Sweepers always do well in this name. Always. CEO bought 1230 to 1260 range on AAOI. Huh? 1230. Oh, so a little cheaper than here. Yeah, that's another thing I'm keeping an eye on. You guys see I've been posting it more often. Insider buying. Because again, when you get sweeper activity with insider buying, it's a good sign, especially position-wise. Haven't really seen outside of AAOI. Oh, this one. This had insider buying and sweeper activity. SRPT. EOSE. You know what's funny? We got GJT in the room who knows all about this name. He knows the story inside out. It's some sort of battery play. They got a big contract that's up for grabs. That's the big catalyst behind it. What happened here was a short blog got touted a short position in it. That's what happened here. But we saw heavy buying back here, heavy. And then it had this move, and then a short blog started touting the short on it. Short blonde, a short blonde. And then now they've been buying it again. But yeah, I try to dig up the story on it. I think it's a government contract, something of that sort. That's supposedly pending, like you're gonna find out about it at some point. He had mentioned he thought it was gonna be out already, but that's the scoop behind it. And yeah, you saw some spec activity into the bell today. Short blonde. So yeah, just keep in mind, again, there's a known catalyst. If they don't get that contract, obviously this thing goes back to where it started, which is what, $1. So calls are probably the best way to play it. All right, put in what you're willing to lose. But it's more of a roll of the dice. Yeah, this thing's losing money galore. Okay, we talk about new leadership. It's not this. It's not this stuff. You know, it's not this stuff. It's none of that. What the hell? What's a hunch on here? What is this menagerie? I must have got pissed off at Carvana on a day trade that went wrong. Jesus, what did I do over here? I can't even. How do I get it removed? There you go. Get that shit off here. VFS. I don't know this one. VFS. What is this? Where do you guys find this, then? Oh my God. Why can't I catch one like this? All I want is one. I'm not greedy. God damn. And is this volume? Does it trade? What's the volume on this thing today? The equity. 15 million shares today. God almighty. Oh man, I would love one of these bad boys. Stop it. Vin, stop it. Are you serious? Vietnamese EV? Jesus Christ. Unbelievable. Yeah, I've been waiting on July. Oh, you're talking about EOS Isahil, right? Yeah, where do you see? This is what happens, right? People try to short it, Ranchero, and then they get squeezed. How do you short this thing? Where do you just find a short for this? Can you even borrow to short? You can't even borrow to short, can you? Yeah? Wow. Look at this thing. You know, see, I can't even catch something like this. Because you know what happens to me. You guys know already. Still bust my balls every day about it. I'd buy this thing at 12 and I'd sell it at 16 to 18 thinking I was Jesse Livermore, right? And then it goes to 75. There was no way that I hold this move. Wow. Yeah, that's crazy. You know, I saw the symbol today. I guess volume alerts, but I didn't pull it up. I didn't know what the hell it was. That's craziness. That's craziness. But yeah, so talking about new leadership, you know, again, we talk about this name, and I know those of you who are new are probably saying, "Oh yeah, who's not talking about it?" After this name we were talking about even before this move. No one was expecting this move, not me. But the difference is this is new leader caliber, right? You see sweeper activity in a name that doesn't catch action. You pull up the numbers, and they're printing money. They're printing money. 70s. There you go, Mark. 70s. Jesus. 70s? 70s. Wow. Wow, Mark. You just ruined my whole weekend bringing that up. But that's the difference, you know? Like the Vietnamese EV name, like, you know, I'm not going to catch that. How am I going to catch a pump and dump like that? Like in the start of bull markets, forget the price action. You see names that have these characteristics. You'll see a ton. You see a lot. You know, then their price action expands and they trade at higher multiples. But not as crazy as this. These numbers are insane, right? Like we thought it was a mistake when we saw these numbers. You know, I didn't even think they were legit. I was like, wait. Is this a Chinese name? I thought it was in yuan. Crazy. But you know, this is the epitome of quote unquote potential new leaders in a bull market. You know, it's like this, right? It gives birth to names like this, Shop, and all the other old bull market leaders. VS is a broken slot machine. Oh yeah. That's why I can't even pay attention. The other thing too, honey, if they don't catch, if they don't see flow, I never even heard of these names. You know, if they don't see flow, I don't even know they exist. But that was the beauty of SMCI. You know, and we look now. There's not a lot out there, and maybe the economy is not too hot. Could be, who knows? You know, we went through a tough time 2022. Maybe that's why. But there's no new growth leadership. It's not out there. You know, it's not out there. What was that name we just looked at? Oh, they are profitable, right? VRT. Let me see. Yeah, they're profitable. VRT. But that's what you'll start to notice. Right? The names that catch action, that start to get hot, the ones that have the crazy growth, they end up the big winners. That's the ones they get excited about. Those are the ones they get excited about. You know, the ones that are losing money. It depends. Like, they're not all profitable. A lot of times in bull market, you'll see companies that are losing money, but their growth rate is ridiculous, right? So they're losing money today, but the estimates are looking to go profitable in 2 quarters. That's how explosive their growth is. You know, so you see a lot of that early on in a bull market. But they're just far and few now, right? We talked about this name, a semi, Rambus, kind of in consolidation now. But listen, again, this is stuff that usually, as long as you're paying attention, comes to you. You see, like Mark says, biggest regret. You know, the reason why even more so we regret it so much is because it's the only one. You know, there weren't other tech names at the time that we played that we missed. This one, you know, it's the only one, and we keep talking about it. You know, so think about like off the COVID lows, like you miss Zoom. Who cares, right? If you caught Twilio and this guy and Net and that guy, you know what I mean? You miss Zoom. But here in this market now, you miss an SMCI that was in front of your face. It irks you. SE, you have to always throw that in there, Max, huh? SE. So we'll see. But listen, regardless, right? Knock on wood, unless something breaks out there and we'll know it, we'll see it in the credit markets and stuff like that. The likelihood is worst case scenario that there could be a correction, but we are in that back to where we were October lows in a range bound market. Put it this way, for 2022 to be back on the table, you're going to have to see an aggressive, sustained spike in inflation, and where the Fed has to break something. Is it possible? Of course it is. But right now, it's not the case. You know, right now, I think it's the total opposite. Right now, I think the Fed's scared shitless about tightening right now. They're more concerned about breaking something from tightening than inflation catching fire on it. In 2022, it was the complete opposite of that. You remember what their mantra was: we got to take down inflation. If we break the economy, so be it. Literally, that's what they were saying. Yep, all these hockey sticks, that's what I mean. They're not new leaders. You're right. You're right. These new leaders aren't going to come from hockey sticks. You know, there's maybe an exception or two. But the majority of these things are in hockey stick mode. Look at this hockey stick. This is beyond hockey stick. Holy Jesus. But this is, ask Ron Cherto, he's been around the block. This is normal. This is how the price action looks post-bubble. You know, this is how they look. Everybody thinks they're going to come back, right? And the best case, here's what when you zoom in, right? If you zoom out, you see the hockey stick. If you zoom in, you see trading range. That's the only way to play them. Yeah, well, these were the two. They were the first two to crack. Remember? Like Zoom was one of the first to crack. Zoom was one of the first to crack. Oh, how about this name? Do you remember how beloved Square was? Then they changed their name. What are they called? Block? I don't know what the fuck he calls them anymore. But look at this disaster. Look at it. And even the other one, but Square was so loved. Look, you know, here, right? And They were undoubtedly new leaders of that bull market, no doubt. Look, making money, crazy growth rates, right? Were they losing money back here? Earned 30 cents for the quarter. Here they're earning $1.30 on $6 billion in revenue in the quarter. Crazy growth. What? The air comes out of the balloon? And then look at this. It's a menagerie. Right? But, I mean, all of them look like this. Or close to it. Look. How about a Shopalicious? That they were buying a little bit of, it's a hockey stick with a little bend to it. Yeah. As it's going up, it's the best stock on the board. On the way down, it's a piece of garbage. Yeah, but that's the story of the market, man. This is nothing new. This is nothing new. Shop could be the one that comes back. It wouldn't surprise me. Wouldn't surprise me. It's, everybody has their different choice of what's going to come back. The truth of the matter is, though, it's like finding a needle in a haystack. It's, you know what I mean? Like, think about what, out of all the group, you're trying to find the handful that are going to come back. Fastly, I know, I saw. This was one of the first to crash and burn, too, right? This thing was a beast. Look, it's coming back. We're counting it, it's coming back, look. Showing signs of life, we're saying, Doug. Look, barely have a pulse, this thing. But again, what you got to try to do, because it only is going to create headaches for you. You got to scroll in and find trades in it. That's all you can do. That's all you can do. There's a gap here. Here. Yeah, they're tough though, man. They're tough trades. You got so much supply, so many buried in these things. Every time it goes higher, there's sellers there. Oh, snap, Stacy. God, that's the opinion. I still can't believe this stock got to where it got to. I cannot believe it. $80. Look at this. So, same thing here. Yeah? You got to look at it now and say, all right, can I get a squeeze to 10 and change? That's the most you could ask for here. And it's going to be like pulling teeth. It doesn't come easy, right? It's going to be like pulling teeth. You got to turn into a dentist to get a buck on it now. Oh my God, I can't believe it. Like, I don't remember it being $80. I don't remember it being $80. But truth of the matter, when it was 80, I had one foot in my bunker at the time. So I wasn't really paying attention to much. If you remember, Sharpies were doing this. When Snap was at 80, Sharpies just added to their largest short position in the history of mankind. So that's probably why I don't remember it at 80. Doku, that was another sweetheart. You know how many people I've seen over the last year telling me Doku's going to be the one that comes back and is a leader? They believe in the company. I mean, I'm not saying the company doesn't have a decent product. It's got nothing to do with that. Amazon came back from the depth of the tech bubble, okay? But it went in selling books online, okay? When it came out, it didn't sell books anymore. You know what I mean? It's a totally different company. Amazon Amazon was solely selling books online when it was going bonkers into 2000. Yeah, these were all good stocks, man. These were all good stocks. TTD, 19. This. Oh, here's another one. You bring up these names. One of you guys like this name. Annette. This is a good looking stock, right? Look. Annette. Yeah, AMC, forget it. Stacy, forget it. Don't even think about ever touching long AMC, ever. Oh my God, I didn't even see, what happened? Oh, they did that conversion, right? These guys, we saw put sweepers go deep in the money, AMC put sweepers. They tattooed this thing. And I'm saying, why in the world are they buying puts on AMC at $10? You know, a $10 stock, the thing goes down every day, bleeding out. Look at this. What a menagerie. But listen, this is what happens. You would think they learned their lesson. I see these monkeys, what do they call gorillas? Apes on Twitter still. AMC for life. Yeah, AMC for life. You're going to be on the street corner with a cup. AMC for life. What's wrong with these? They're kids, though, right? They're young kids. They're all youngsters. This thing is still giving them hope. GameStop. Oh, Jesus, forget it. They're kids, right? Yeah. Well, what are you going to do? Hopefully but these kids, they're a different generation. They don't learn. They're stubborn. They don't learn. Stupid has no age limit. Yeah, you're right, though. You're right. Yeah, Reddit, that's right. Reddit. Is that still around, the Reddit stock things? I haven't heard anything about it. I remember they were getting picks off Reddit, stock picks. We needed a cleansing bed, huh? TikTok. What are you guys trying to do? Every time I come on this webinar, at the tail end, you try to spook me into my bunker. Every time, right? Ryan, I look at that stuff when I still see it, the TikTok and the AMC, and honestly, it spooks me that we need more selling. I hate to say it, you get, when those bull phases come to an end, they get completely washed out. They get so washed out that they're turned off from playing stocks ever again in their life. Takes them decades to come back in. Think about this. From 2000, okay? Not 2008. 2000, retail didn't come back in until 2021. Okay? From 2000, 20 years. That's how torched they got in that tech bubble. Torched. Yeah, listen. Especially if you're new to the game and you come in, chances are you're gonna be involved in some sort of fashion. The trick is you got to learn from your mistakes. If you don't learn from your mistakes, you're gonna get lumped up continuously. All right? I tell you, it sounds corny. The beauty of this game, it will teach you what you're doing wrong. It will point out to you why you're losing money. Okay? If you keep doing it, whose fault is it? Right? Whose fault is it? But my one promise, the market will show you bluntly what to stay away from to survive and make money. To at least survive, more importantly. You keep making the same mistake over and over again. Some people are stubborn. Listen, it's gambling, right? if you got real degenerate blood, we all have some degenerate blood in our veins, some fashion, right? But if you're a full-fledged degenerate, sometimes you can't help yourself. Yeah, all these things. Forget even Bitcoin. What about all these other made-up coins they create out of thin air and all this stuff? So that's why it's like it would surprise me if this was the end of the cleansing. I'm being dead straight with you guys. It would surprise me. Meaning that it was a lot shorter and less harsh than I thought it could be. Compared to what we saw out there. Now, it could be over time, right? We talked about that. There's nothing worse than suffering over time. Oh, yeah. Football picks. I'm gonna post some contrarian plays. I didn't even look at the card. What do we got? College football Saturday? Not a big card though, right? I gotta take a peek. See what all the riffraff action's going on. And maybe take the other side of a few games for some action. Lose my money. Who? What do you mean? Oh, this is considered week 0 in college football? Really? Oh, well, you got all the big lines, Khalid? All the big lines. Later, Ronnie. All right, yeah, I'll see. If I find any contrarian plays, I'll shoot them out. We'll see. Maybe we'll roll the dice. Or maybe you just go opposite what I play and you make money by the end of the year. All right, everybody, enjoy the weekend. All right, we stay nimble. We look for windows of opportunity for squeezes, and let's see, right? We got the flow and positioning to keep an eye on. We'll see how things shake out here. Enjoy the weekend, everybody. Khalid, make some money Saturday. I'll talk to you guys later.